Hello guys, this is fairbinaryoptions.com and this is the Euro US dollar with the recent spike higher threatening the previous highs. Remember, we were looking here at the possible contracting triangle. It is still a triangle. What I would like to point out here is that even if these highs here are going to be broken, as we are saying that this is our previous B wave, so this is our previous B wave. Even if these highs are going to be broken, it doesn't mean that the triangle or the contracting triangle is not valid anymore. Actually, what it means is that the triangle has a special form or a special shape named running variation of a contracting triangle. Now let's do the first thing first and try to label the proper triangle here. So this to be wave A, the B wave to the upside, then of course the C wave should be the one here on the right side, A, B, C, and then the D wave to the upside, and this should be our D wave. So this should be our D wave right here, right now. So based on this, the move that started from these highs on the left side, normally like this from here, the move that started from here is possible contracting triangle wave A, B, C, D, and now we're looking for an E wave to the downside. But this contracting triangle, in order to respect the name of it, basically to contract, needs that the A and C and the B and D trend line should be, let's say, should point into the same direction. Namely, the apex of the triangle should basically not be a rising one. Let's make this one a new color. Let's make it black, like this, and a bit bigger. Clone it, and it goes from the B wave here to the upside here. Now there is a problem with this triangle. What's the problem? Well, first of all, if, but only if, price goes and takes the highs in this D wave, it would take the highs in the B wave is 37.73, the highs here are 37.70. It's not mandatory, but if the highs these are going to be taken, it means that the prior wave was here on the B wave, and this is a special form of a triangle, not a running variation like mentioned earlier, but an irregular, it is being called an irregular contracting triangle. It still needs the D wave to come here, but not to retrace way more than this area. Therefore, what I would really like to do here is to buy put options that we have still the possibility, or this possibility here, like this, and even though it doesn't seem so, the D wave here, it didn't make the highs when compared with the possible previous view. Even if price goes and makes a high for the coming days, I would still like to buy put options, and the expiration date would be end of week expiration date. I will take that chance as we are heading for wave A to the downside, and this wave E to the downside, and this wave E to the downside, to come most likely into the previous area that was support or resistance for so many times. So still looking 36.50, even below 36 to come. Why not on the euro and the US dollar? Therefore, the logical thing to do here is to go and buy put options. This is our recommendations here on fairbinaryoptions.com, and let's write the expiration date as well on the screen. Well, the expiration date is So buying put options with end of week expiration date as we really want price to be lower than the striking price, striking price being the price you buy the option for by the time the option expires. Thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor, Lioneye. Bye bye.